Sorry guys, was listening to how the sound of music is like. And it's more like ching ching ching, let me hear them dollar ring. Hello and namaste and welcome to MOM Squared. I'm Vivek Shetty, an engineer by profession and an investor by addiction. If you and I share the same addiction, we are on the right page. Yes guys, we are on the right YouTube page. And while you're here, do not forget to hit the subscribe button and please click on the bell icon. Subscribe, bell icon. And don't forget to hit the like button as well if you like the content. Guys, today's video is to talk about PSTH and UMG, okay? Once again, however, from the perspective of what I believe UMG share price will be by the end of this year and what will its price be by end of next year, okay? So I had a very typical day, woke up at 5, started doing my research on, the market, looking at the futures, looking at the other economical factors, if there's any major news and whatnot, and made it a point to hop onto the call for the shareholders meet with UMG and PSTH. I had to do that, right? When you have PSTH as one of your biggest holding in your portfolio, you have to make it a point that you are thorough on your research and you're constantly reading and researching about it, okay? Any news updates that comes up or any presentation or basically any opportunity to listen to the CEO or listen to the leadership team with these companies, you have to make it a point you're doing that, okay? Speaking of which, again, I'll start by summarizing some of the things I learned on today's call and in general what I've been researching for UMG, okay? UMG, obviously, Universal Music Group. You all know by now that PSTH is buying 10% into UMG at a valuation of $40 billion. Okay, we all know that by now. But let me talk about UMG now. Okay, UMG has 32% market share in this particular industry, which in my opinion is quite significant. I mean, not my opinion, I guess the numbers tell you the story there. The reason I think it's it's kind of impressive to see that kind of market share by one player is considering the other major players, right? The Warner Music Group, you got Sony. I mean, when I look at those names, I didn't really know that UMG, before the whole PSTH thing happened, that UMG had such a huge market share. They have something around 3 million some songs, in their call it catalog. And they pretty much work with all the big names, the artists, big and small names really, globally, okay, including India. I mean, I was surprised to see the presentation and see some of the songs they were playing, and that's owned or that's falls under the UMG umbrella. And I was like, really? I didn't know that. But anyways, so yeah, they got a huge list of artists, songwriters, old albums, under their umbrella, which it's quite tempting in the sense that the future I see for UMG, okay, especially with the value stream or with the revenue stream that they have moved towards, right? This presentation talked about how music used to sell in the olden days, right? With music labels, you're selling the hard copies of the music. And then your sales varied based on your hits and whatnot. There wasn't much channel to market it and promote it and such. Now with online streaming, the subscription models with Spotify, Amazon, it becomes much more readily available for all of us, right? Which automatically opens the door for this industry, in my opinion, in terms of the revenue streams. Okay, they did talk about how the majority of the chunk of their revenue was from their streaming and subscription model. Like I think they said around 52% of their revenue is coming through that channel. Okay, their other revenue channels were recording music, publishing, and merchandise. Right, and when you look at those revenue streams, I always also like to understand or look into what are their ways to spend money. Right, where do they spend money on? As a regular expense and as a investment, it's not a typical manufacturing firm where you're thinking about capital investment, right? So this investment is more like they're investing in technology, right? For instance. So yeah, when you talk about the expenses that these companies, the music industry, right, and the music label company would deal with, would be like obviously paying the artists, paying the songwriters, you know, and from the investment standpoint, it would be in technology, into their own people, obviously. So yeah, I mean, from when you compare the revenue channels to the expense, I don't see any other industry that lines up closely to this in terms of, you know, the potential to make higher margins and higher, you know, bottom line than many other industries out there, in my opinion. So this is good, you know, to look into, right, or to see happen. I did take a look in terms of their balance sheets for the last 6 years. They have seen a growth of roughly 17 to 20% in their income, okay? And their EBITDA has been growing on 20% on an annual basis for the last 6 years. So the growth chart for the last 6 years has been great, which explains why Bill clinged on to UMG or Vivendi to sell the 10% share of UMG for the last 6 months, okay? Totally makes sense. Now I want to quickly touch on where I think UMG stock price is going, okay? But let me clarify a few things. So if you've watched my previous video, you know that for every 1 share of PSTH you own, you will be getting 0.645 shares of UMG, okay? And that's purely to balance out the, you know, outstanding shares, okay? So PSTH will be getting around 180 million shares of UMG, but we had around 280 million outstanding. So they took 180 divided by 280. That's how many, you know, that's how they came up with that ratio of shares we would be getting for UMG, okay, by the end of this year. So December, look out. It should be on your, it should pop up on your trading accounts, okay? So at that price, so we paid, obviously PSTH paid $14.50 to get 0.645 UMG, which puts the UMG stock price, right, at current date at $22.5, okay? So $22.50 is what UMG would be trading if it was opening today, according to, you know, the price that Bill paid for it, okay? So I wanted to set that as a baseline, guys. So from here, okay, let me say that that is at a 40 billion valuation. So $22.50 at a 40 billion valuation. I'm looking at some of my notes I wrote. Obviously, I can't remember all these numbers. At a 40 billion valuation, and the revenue for 2020 was $8.4 billion, okay, US dollars. Their EBITDA for that was 1.68 billion, okay? So basically, at current state, if UMG was to go public, okay, today, and the price that Bill paid for it is $22.50 per share, when the company is making a revenue of 8.4 billion in 2020 and 1.68 billion EBITDA, okay? EBITDA, hopefully I'm saying it right. So yeah, so that is important to understand as a baseline, okay? So in other words, you can say the stock price is trading at 23.8 times EBITDA, okay? You follow me so far? Now, let me take a step back. Tencent bought this 10% stake into UMG at 30 billion valuation. At that point, they bought it at a 26.4% EBITDA, okay? So clearly, Bill got it at a better, you know, in fact, when they announced this, it was more like trading at 33% of the EBITDA, okay? So compared to the 33 number or the 26.4 for that matter, the 23.8 that Bill is paying looks much better, right? So we know you know he brought value to it, okay? So let's keep that as your baseline. Now let's talk about valuations that's been put in place by JP Morgan. There's Goldman Sachs that's basically evaluating UMG at around $50 billion, okay? $53 billion. So if you take that valuation into account, and I do believe that valuation is accurate, is going to be accurate, because why that valuation is accurate is because I told you the EBITDA has been growing over the last 6 years at a rate of 20%, okay? So if I take 2020 numbers to 2021 numbers, that 1.68 billion of EBITDA is going to be a 2.1 billion EBITDA based on 2021 numbers, okay? Because the sales will go up, the EBITDA, again, if you're looking at the same growth trajectory as over the last 6 years, which is safe to assume, okay? Safe assumption. So if I take that 2.1 billion and multiply it by the 23.8 factor, right? 23.8x, it puts the valuation at around $50 billion, which lines up with what JP Morgan is saying and Goldman Sachs is saying, okay? So based on if the 50 billion valuation, I believe I am very positive, okay, that by the end of this year, when they do the IPO, like December, the valuation is going to be somewhere around $50 billion, which will put that stock price from $22.5, or sorry, yeah, $22.5 to a $28 stock price, okay, which is a 20% increase, which is a decent, you know, tell me other returns that not meme stocks, unless you get lucky here and there on a few stocks, that guarantees you that there is a 20% growth between now and December, right? When I say guarantee, obviously the numbers, I'm using numbers to come up with for my analysis, okay, guys? I'm not an investment advisor by any means, so make your decision based on your own research. Great time to say that. Then for the next year, okay, so I took the same 20% growth rate. Okay, in fact, I reduced the growth rate for EBITDA to 15%, okay, just playing it safe. If I take 23.8 time factor of EBITDA, the EBITDA at 15% growth rate for 2022 would put them at 2.5 billion EBITDA, okay? At 2.5 billion EBITDA times 23.8, you're looking at around 56 billion in valuation. So the stock price would be more trading in the realm of $31.5, okay? So from today's date, that's a 30% growth. So if you're holding UMG till the end of next year, you know there's a possible upside of 30%, okay? Now, I still do believe that this is a little, risk averse, or I would say this is a little, not too aggressive estimate in my opinion. And I say that because I remember I told you about the closest competition being Warner Music Group, okay? So let me put stock price in perspective of competition. It's always good to look at the financial results for that company over the last few years and what the forecast is, but it's always also important to compare it to their competition, okay? You have to have two ways to look at it to come to a stock price. So when I look at Warner Music Group, they're trading at around $35 per stock right now, okay? Obviously, you have to look into what is the number of outstanding shares and so forth, okay? Which I did, okay? Which I looked at the PE ratios and whatnot. But anyways, I'll limit this one to the revenue discussion. For example, in 2020, Warner Music Group, WMG, had a revenue of $4.46 billion, almost half of what UMG has, okay? Which was interesting to look at. And they're trading at $35 stock price. If I'm looking at them from EBITDA perspective, they are trading at around like 60 some percentage of EBITDA compared to the 23.8 that Bill managed to get, right? So you can see the stock price for UMG has a huge potential because the Warner Music Group is trading at a higher multiplier to the EBITDA, and in fact even higher PE ratio, okay? So yeah, I do believe that the $28 price by the end of this year and the 31.5 by end of next year is a little less aggressive, moderate kind of estimate, but there's a huge upside if you compare it to the competition, right? The revenues is one factor for WMG. They had 4.46 billion, but their net income was negative 475 million, okay? Their EBITDA was 0.625 compared to 1.6. So guys, you need to understand how it compares to this WMG. And when I look at that, I say, when you're doing my analysis purely on the balance sheet basis, I come up with a slightly less aggressive price target of 31.5 or $31.50 for next year, but it could very well trade in the $60 range. Comparing it to Warner Music Group, I mean, it does feel like it's trading undervalued right now in that sense. However, if that happens, obviously the valuation of your UMG will also go up. So it's going to be interesting. I won't be surprised if I start to see 40s and 50s for UMG next year, okay? Or maybe even later this year, you never know. We all know how market trades, right? I mean, WMG is trading at a market cap of roughly $18 billion, okay? With half the revenue, negative net income, EBITDA as low as 0.625 compared to 1.6. UMG, I'm very happy about. So Bill, in my opinion, definitely got a very good deal here. So the reason I wanted to talk about the stock price, now you guys can take that component and add it to the other PSTH aspect of the deal and see what is the new value that PSTH is bringing. If my UMG share itself is going to be $31, obviously you have to discount it because you're not getting 1:1 ratio of the stock, but there is a 30% increase to the $14.50 you're already paying, right there. So anyways, do look into these details and try and understand why PSTH is a great buy even at current levels, okay? Anything under 23 bucks, keep adding them. I think they're trading now at more like 24, but if you get an opportunity somehow, if it goes back down under 23, do add it, in my opinion, okay? I'm invested around 100K, close to 100K right now. So it's a significant chunk. I would say like 80%, 70-80% of my portfolio, okay? So you know that I'm doing the research because accordingly, because I'm not gonna risk my investment here with half-ass research and stuff. Okay, so hopefully guys this video was helpful, and if it was, do not forget to hit subscribe. And while I say do not forget to hit subscribe to my channel, guys, if you own UMG, if you own PST, please go check out UMG's YouTube channel as well and do subscribe there. Guess what it means? It means more value stream for them, guys, okay? Which means our stock price goes up too, okay? I've decided from now on to listen when I stream videos on YouTube. I'll be doing it through their channel, so that way the revenue goes right to them, right? Which is going to help my stock price too. Okay, on that note, guys, adios.